All right, today we're cracking open a case file on the defense giant, Lockheed Martin, or LMT. This stock has been in a really puzzling freefall, and our mission, if you choose to accept it, is to decode the technical signals and figure out what in the world is going on. Let's get right into it.
So here's our starting point, our scene of the crime, if you will. The price is sitting at $452.20. But the real story here isn't just the number, it's the fact that it's been dropping, which leads everyone to one huge question. And that's really the heart of the mystery, isn't it? Are we looking at a falling knife, something you absolutely do not want to try and catch? Or is it more like a coiled spring, just getting wound up and ready to snap back in a big way? To figure that out, we've got to dust for some technical fingerprints. Okay, we are now officially entering the forensic phase of our little investigation here. We're going to look at all these technical indicators not just as, boring charts, but as actual clues, little fingerprints left behind by the market that can help us piece this whole story together. So our first clue comes from something called the RSI. The easiest way to think about it is like it's a car's tachometer, but for stock momentum. If the needle's in the red, the engine's redlining. It's overbought, and it probably needs to cool off. But if the needle's way down low, it's like it's running out of gas. It's oversold and might be due for a rebound. So what's the tachometer on LMT telling us right now? Well, the RSI is clocking in at 42.41. Now, for RSI, anything below 50 is generally considered bearish territory. So this is telling us loud and clear that the downward momentum is still in charge here. The engine is definitely not revving high. That's a pretty big clue pointing towards that falling knife theory. And yeah, the evidence just keeps piling up. Our second clue is from the MACD indicator, which is another way to look at trend and momentum. And wow, it is sitting at a deeply negative 8.36. That is a very strong signal confirming this bearish trend. Case closed, right? Well, not so fast. In any good investigation, there's always a twist. So while the main MACD number is super bearish, its histogram, which kind of shows you the speed of the trend, is actually improving. What that means is the downward momentum is slowing down. And then another indicator, the stock RSI, is pegged at 100. That suggests this little bounce we've seen might be getting overextended. So the plot really thickens here. Okay, so with these conflicting clues, let's shift our focus a little bit. Now we're going to look at the actual physical obstacles the stock price is facing, these key levels it has to get through. And we're going to compare that to where some statistical models think it should be. And this chart really shows the challenge LMT is up against. The price is basically boxed in. For it to move up, it has to first break through this short-term ceiling at 456.72, and then there's an even bigger wall waiting for it at 464.15. These are some serious obstacles for any kind of recovery. So, we know where the price is, and we can see the roadblocks in its path. But let's ask a totally different question. What if we just ignore all the noise for a second and just look at its recent statistical trend line? Where should the price logically be trading right this moment? And the answer, according to a linear regression model, is $462.84. Whoa, that is a huge piece of information right there. The model is telling us that based on its own recent behavior, the stock should be trading more than $10 higher than it is right now. Let's put that in percentage terms to make it even clearer. The stock is currently trading 2.3% below its statistically predicted value. This suggests it might actually be undervalued, at least relative to its own trend. And that is a powerful clue that really supports that coiled spring theory, that there's tension building up for a potential snapback. Okay, let's take a step back. We've gathered all the clues. We have the bearish momentum, but also those hints of a slowdown. We've seen the price ceilings, and now this statistical undervaluation. It is time to put all this evidence together and lay out the two most likely scenarios for what happens next. So look, the whole thing really pivots on this one level, 456.72. The bull case is pretty simple. If the price can break above that line and stay there, that's a strong signal the trend might finally be reversing. The next target would be that long-term resistance up around 464. But if it tries to break that line and gets rejected, that's the bear case, it probably confirms the downtrend is still in charge and the price could easily fall back down towards that 440 support area. And to make it even clearer for you, here are the three numbers you really need to watch. First, you've got the support floor at 448.13. As long as it stays above that, the bulls still have a fighting chance. The first hurdle to clear is 454.54, but the real decider, the line in the sand, is 456.72. Okay, we've reviewed the evidence, we've analyzed the clues, and we've outlined the scenarios. I think it's time to close this case file. So, after all that, what is the final verdict?
And here it is. The conclusion from the report is that LMT is likely in an oversold bounce. It basically acknowledges that the statistical undervaluation we found, that minus 2.3%, presents a short-term tactical opportunity for a quick move up towards 460. But, and this is a big but, it ends with a critical warning. The main overarching trend is still pointing down.
So, to put that as plainly as possible, our investigation suggests that while the stock might be a bit of a coiled spring in the very short term, it's still acting like a falling knife when you look at the bigger picture. All the evidence points to a possible short-lived bounce, but not necessarily a full-blown recovery. At least not yet. And that leaves us with one final question, doesn't it? The analysis points to a potential short-term trade, sure, but is this little bounce the first sign of a real sustainable recovery, or is it just a classic bear market trap? The answer to that is going to be written by the price action around those key levels we identified, and I guess that's a case we'll just have to keep open.